Let me tell you something about this game, this brutal, beautiful business of speculation. The biggest mistake you will ever make is confusing your feelings with the facts on the tape. You are not trading stocks or commodities. You are trading human nature. And the most dangerous part of that human nature is the desperate need to be right now. You know, I've seen men ruin themselves not because they were stupid, not because they didn't understand the mechanics of the trade, but because they couldn't control the voice inside their own head. That impatient, emotional voice, that voice that whispers, "Get in now or you'll miss it." That voice that screams, "Get out now before it takes it all back." That voice, my friends, is the greatest enemy of the speculator. It is not the market. The market is just a mirror reflecting the collective hope and fear of millions. Your enemy is the impatient, emotional voice that forces you to act before the setup is confirmed. Think about that for a minute. We spend hours studying charts, analyzing volume, reading reports, looking for that perfect convergence of factors. We define our risk. We set our entry points. We draw our lines in the sand. And then, at the critical moment when the market is just beginning to decide which way it will go, that little voice of impatience grabs the wheel. It's the anticipation, isn't it? The urge to be the genius who caught the exact bottom, the man who sold the precise top. That is the ego demanding payment before the work is done. That is the feeling that pushes you into the trade 5 minutes too early, 3 ticks before the breakout is confirmed. And what happens when you enter on anticipation, on hope, on a hunch? You are immediately exposed. You are betting against the weight of the market with nothing but a feeling in your gut. And let me tell you, your gut is a liar in this business. Your gut is designed to keep you safe in the jungle, not to make you rich on Wall Street. The true professional, the one who lasts, the one who actually takes money out of this business year after year, he doesn't trade his feelings. He doesn't trade his hope. He doesn't trade his fear. He trades objective evidence. He trades the tape. And until the tape provides that undeniable objective evidence, he does nothing. He sits. He waits. Does that sound boring? It should. Because the business of making money is often excruciatingly boring. It's a waiting game. It's a game of patience. It is the counterintuitive discipline of doing nothing, using patience as a shield until the trend is undeniably established. Most people cannot handle the waiting. They interpret inaction as weakness. They interpret sitting on cash as missing out. That is the amateur mindset. The amateur believes that they must constantly be active to justify their existence as a trader. They need the stimulation. They need the rush of having money on the line. But remember the rule. The market doesn't pay you for being active. It pays you for being right. And you cannot be right consistently if you are trading based on the frantic pulse of your own anxiety. We need to understand what the market is. It is not your friend. It is not your enemy. It is a machine, a brutally efficient machine. It is indifferent. It cares nothing for your hope. It cares nothing for your mortgage payment. It cares nothing for the hours you spent studying. It only cares about the force of money and the weight of conviction. It will confirm your failure just as quickly and just as brutally as it confirms your success. When you enter a trade based on hope, I hope it bounces here. I hope the earnings report is good. You are introducing a variable that the market does not recognize. Hope is not an entry signal. Hope is a prayer. And the market does not answer prayers. It only answers to volume and price action. If you are trading based on a feeling, you have already lost control. You have turned speculation into therapy. You are using the market to prove something to yourself or to your friends or to your ego. And the market will take your money and use it to fund the accounts of the men who are coldly, dispassionately waiting for confirmation. Think of it this way. You are a general. You are commanding your capital. Would a general send his troops into battle before the terrain has been scouted, before the enemy's position is confirmed, simply because he has a hunch that now is the right time? No, that is lunacy. That is suicide. Yet that is precisely what the emotional trader does every single day. He sees a stock that has dropped 20% and thinks, it must be cheap now, I'll buy the dip. That is anticipation. That is betting against momentum based on a feeling of value. The market does not care how cheap you think it is. It only cares about the direction of the flow. And if the flow is down, you are catching a falling knife. The most profitable action you can take in this business is the counterintuitive discipline of doing nothing. I know. It's hard to sit there. It's hard to watch the tape moving, watch those prices flash and keep your hands in your pockets. It feels like you are missing the boat. It feels like opportunity is slipping through your fingers. But let me assure you, the moment you force a trade, the moment you trade out of boredom or impatience, the boat you are catching is usually sinking. Patience is not passive. Patience is an active shield. It is a psychological defense mechanism against the chaos of the market. While the amateur is frantically clicking, forcing trades and paying commissions, the professional is sitting back, conserving his capital, waiting for the high probability setup to present itself. He uses patience until the trend is undeniably established. What does undeniably established mean? It means the market has done the work for you. It means the price action has eliminated reasonable doubt. It means the move is confirmed not by your wishful thinking, but by the objective evidence of the tape. If you are looking for a breakout, you don't buy the stock approaching the resistance level. You wait for the stock to close decisively above that level, ideally on increased volume, and then you may consider your entry. You wait for the market to prove your thesis correct before you commit your precious capital. Why? Because those moves that look like breakouts, but fail to confirm, those are traps. They are false signals designed by the market to shake out the impatient money. The market loves to punish anticipation. It loves to reward discipline. Never anticipate the turn. This is the rule that separates the men who make a living from this business from the men who merely feed their capital to the exchange. You cannot guess the bottom. You cannot guess the top. That is a fool's errand. The amateur constantly tries to be a prophet. He wants the glory of saying, I bought when everyone else was selling, or I sold exactly at the peak. That desire for glory, that need to be perceived as clever, that is the emotion you must divorce from your trading. The professional understands that catching the exact turn is irrelevant. It is an unnecessary risk. He doesn't need the first 10% of the move, and he doesn't need the last 10%. He only needs the big middle. The fat part of the move, where the trend is established, the momentum is clear and the risk is defined. Your capital must be protected until the tape itself provides the objective evidence that the time for profitable execution has arrived. If you buy expecting the turn and the turn doesn't happen, what happens to your mind? Panic sets in. You are immediately in a losing position, and now you are forced to make a decision based on fear rather than on logic. You cut the trade too early, or worse, you hold it too long, hoping against the evidence. That is the spiral of emotional trading. It starts with hope, anticipation, and ends with fear, panic selling. The disciplined trader, the one who waits for confirmation, he enters the trade when the market is already moving in his direction. If the market continues in that direction, great. If it reverses, he cuts the trade because the initial confirmation signal has been invalidated. His decision is based on objective criteria, not on the sinking feeling in his stomach. Do you see the fundamental difference here? One man is betting on what he thinks should happen. The other is betting on what the market has already proven is happening. The market is never wrong. It simply is. If you find yourself arguing with the market, if you find yourself saying, this stock shouldn't be doing this, or the news was good, why is it falling? You are trading your opinion, not the tape, and your opinion is worthless. You must stop trading your opinions. You must stop trading your feelings. You must start trading the facts. This means you must define your setups with absolute clarity. A setup is not a vague feeling. It is a checklist. It is a confluence of objective data points. For instance, maybe your setup requires a close above the 50-day moving average, a corresponding surge in volume 150% above the daily average, and a breakout from a 10-day consolidation pattern. If only two of those three things happen, what do? You wait. The impatient trader says, well, the first two happened, that's good enough. He compromises his rules because the emotional itch for action is too strong. And that compromise is where the market finds him and extracts its tax. The market rewards integrity. Integrity to your rules. Integrity to your process. Let's talk about the biggest emotional trap, the fear of missing out, FOMO. It is the silent killer of accounts. You see a stock running hard, and you weren't in it. Your ego screams, "Idiot, you missed the move." And in a panic, you jump in, not because the setup is confirmed, but because you are chasing a feeling of regret. When you chase, you are buying at an elevated price, usually right before the short-term pullback or correction. You have committed capital based on historical price action, what the stock has done, rather than current confirmed conditions. The professional looks at a stock that has run away and simply says, "Too late. I missed that train." He puts his hands back in his pockets and waits for the next train. Because there is always a next train. The market is infinite. Opportunity is endless. But your capital is finite. You must treat your capital like the rarest commodity in the world. It is your soldiers. It is your ammunition. You do not waste it on skirmishes. You save it for the undeniable high-probability battles. Does this sound like I am advocating for sitting on the sidelines forever? No. I am advocating for sitting on the sidelines until the market forces you to act. The truly great trades, the ones that change the trajectory of your account, they are not subtle. They do not require interpretation. They do not require guesswork. They hit you over the head with conviction. When the market is ready to move, it moves with authority. It provides confirmation that is unmistakable. If you are squinting at the chart, trying to convince yourself that the setup is there, then it is not there. The signal must be clear. The evidence must be objective. It must be a confirmation that any 5 different experienced traders would agree upon. If you are relying on your personal mood or the coffee you drank this morning or the feeling you got when you woke up, you are gambling. The entire discipline of trading, when you strip away the charts and the indicators, is a system designed to insulate you from your own flawed psychology. The rules are the fence you build around your emotions. And the most important rule is the confirmation rule. Never act until the market proves you right. Let's examine the psychology of patience again. Why is it so hard? It's hard because we are rewarded in life for speed. We are rewarded for hustle. We are rewarded for effort. We are conditioned to believe that movement equals progress. In trading, the opposite is often true. Movement without confirmation is destruction. You must recondition your mind to recognize that waiting is the highest form of effort in this business. Waiting is work. It is mental labor. It is the active suppression of the human impulse to gamble. When you're waiting, you are analyzing. You are rehearsing your plan. You are checking the broader conditions. You are protecting your capital. You are doing everything necessary to ensure that when the signal finally flashes, you are mentally and financially prepared to execute without hesitation. Hesitation, by the way, is the twin brother of anticipation. Anticipation gets you in too early. Hesitation prevents you from getting in at all, or worse, makes you chase the move after confirmation. Both are products of an undisciplined mind relying on feelings rather than facts. If you wait for confirmation, you might miss the first 3 points of a 20-point move. So what? You have secured the remaining 17 points with a far lower risk profile. The man who anticipated the move, who bought 5 minutes before confirmation, he is likely sweating out those first 3 points, worried the market will turn around and crush him. He is trading from a position of anxiety. The disciplined trader, the one who waited for the move to confirm, he is trading from a position of strength. The market is already proving him right. He can manage his position with clarity and confidence because the weight of the evidence is on his side. This is the difference between speculation and gambling. Gambling is betting on an outcome before the evidence is in. Speculation, as I define it, is entering a position only after the evidence begins to align with your thesis. You must always be asking yourself, where is the objective evidence? If you are looking at a stock and you want to buy it, you must be able to point to the chart and say, here is the confirmation, the price action here, the volume here, the momentum here. This is what justifies my entry. This is not a guess. If you cannot point to the confirmation, you are trading your feelings. And trading your feelings is like trying to pay your bills with counterfeit money. It looks good for a moment, but eventually the machine exposes the fraud, and you pay the penalty. This requires a profound shift in how you view the market. Stop viewing it as a place to get rich quick. View it as a courtroom. You are the prosecutor. Your capital is the defendant. You cannot commit the defendant to the trade unless you have objective, undeniable evidence beyond a reasonable doubt. Anticipation is circumstantial evidence. Confirmation is the smoking gun. You wait for the smoking gun. If you are always trying to anticipate the turn, you are fighting the trend. And I have told you before, and I will tell you again, never fight the tape. Never fight the current. The man who fights the current is exhausted and drowned. The man who waits for the current to turn in his direction, he rides the wave to shore. The market will always provide the opportunity to enter a trend that is already established. It will provide pullbacks, consolidations, and retests of support that allow the disciplined trader to enter with defined risk after the move is confirmed. But you have to have the mental fortitude to let the initial emotional noise pass you by. When you read the history of great speculators, not the flamboyant gamblers, but the cold, calculating operators, you will find that their success was built not on cleverness, but on monumental patience. They understood that the most important work happened before the trade, in the waiting, in the preparation, and in the strict adherence to the confirmation rule. They understood that the market has a wonderful way of humbling the arrogant and emptying the pockets of the impatient. If you find yourself constantly in motion, constantly trading, constantly fiddling with your positions, I guarantee you are trading your feelings. You are feeding the beast of impatience. And that beast will consume your capital until you learn the discipline of silence. Silence is the sound of money being made. Think of the silence before the breakout. Think of the quiet waiting period during consolidation. That silence is where your discipline is forged. That silence is where you protect your war chest. When the market finally confirms the move, when the tape screams the direction, you strike hard, you strike fast, and you move with conviction. Why? Because you waited for the objective evidence. You waited for the confirmation. You are not guessing. You are executing a plan that the market itself has validated. This is the only way to avoid trading your hopes and fears. You must externalize the decision-making process. The decision to enter or exit cannot be based on how you feel about the position. It must be based on how the market is acting relative to your confirmed setup. If the market violates your stop loss, you exit. Not because you're afraid, but because the market has provided objective evidence that your initial confirmation was a failure. If the market confirms the breakout and accelerates, you hold. Not because you hope it goes higher, but because the objective evidence of momentum is still intact. It is a mechanical process, driven by facts, insulated from the emotional turmoil that destroys the vast majority of participants in this game. So the next time you look at a chart, and you feel that familiar itch, that urgent need to click the button, that fear that you will miss the next great run. Stop. Put your hands behind your head. Lean back and ask yourself this single critical question. Has the market confirmed the move? Is the evidence undeniable? Or am I trading my feelings? If the answer is the latter, you do nothing. You wait. You conserve. You protect your capital. Because if you can master the art of waiting, if you can master the discipline of doing nothing until the move is confirmed, you will find that the profits take care of themselves. The money flows to patience. It flows to discipline. It flows to the men who respect the brutal indifference of the machine and refuse to trade their fleeting, worthless emotions. The market will always provide the opportunity. Your job is not to create the opportunity, but to recognize it when the tape lays the evidence bare before your eyes. But you do not have to walk this path in the dark. You think your pain is unique? You think your mistakes are new? They are not. The market hasn't changed because human nature hasn't changed. Many years ago, I sat with a man named Lefèvre. I told him everything. The panic of 1907. The cotton trades. The millions made and the millions lost. I held nothing back because I wanted the truth of this business to be known. He wrote it all down in a book, Reminiscences of a Stock Operator. Most people read it as a story. They read it for entertainment. Do not make that mistake. It is not a novel. It is a textbook on human psychology disguised as a biography. It is a map of the minefield you are walking through right now. I have left the path to this book below. It is there for the taking. Do not ignore it. If you want to understand why you lose, if you want to see the traps before you step into them, go back to the source. Read it. Study it. It is the only inheritance I can leave you. You can find the way, but only if you are willing to listen to the ghosts of the past. School is out. The market opens tomorrow. Be ready.